Hey, what's up guys, it's Clash from Research Trade. Now today's video is going to be to show you one trade that I did this morning on GBP/USD. And this is a day trade, so it's really intraday. But the basic thing I want to focus on is how to look for a trade with price action only. Because a lot of people, and probably too many traders, are going to use indicators to trade. They're going to put way too much stuff and way too much emphasis on having confirmation. So I want to show you how, simply with the price and simply with reading what's happening in the market, you can understand, you can get a good picture of what's happening and how you should trade forward. So I want to show you that right now. And I'll go on the 5-minute chart because this is where I take all my trade intraday. And I'll just go back because whenever we're going to trade with price action, it's really important to know the context, to know what's happening before. From what's happening before, we can have a better idea of what's going to happen in the future and what we can expect. So I'll place the chart. The New York session opened at 8 a.m. every single morning. So I'll just put it at 8 a.m. to get a good idea. There you go. Okay. And I want to show you what's happening a little bit in the past because we want to have this context. So during the London session, which is just before the New York session, price started to go up pretty quickly. Now, at some point, we started to consolidate a little bit. We still broke out, but then we made the top. And this top, we never reached it again, right? We went back down, made a lower top, same top here, and we started to consolidate. Now, we really started to make a range like this. So whenever I see this before the opening of the New York session, I'm expecting that there's going to be a breakout. Okay, so either a break above here or a break below here. And in fact, we had a break below even before the session opened. So whenever we're going to have this break below in a sort of range, the number one thing I'll be looking for is for price to come back to this range and then for a continuation trade. Okay, so I'll be looking for a nice retracement to that range. And then I'll be looking to sell here if the sellers are really in control, are really entering back in control. And this, I'll know it with price action. Price action is going to be the main thing to guide my trade at this point. So, in fact, exactly what happened is that we came back to this range. We came back. Then I started to see this candlestick, which has quite a fair wick above. Now, compared to these two, this candlestick here, the last one, is showing me that the sellers are coming back a little bit. Okay, because we had this bullish candlestick, complete body almost. This one with a big body, almost no wick. And then third one here, small body and a big wick above. This is a sign. Now, it doesn't mean I'll start to trade now, start to take a trade now. I'll wait because this is only one indication I have. And then this is the first bearish candlestick we have. But this is just showing indecision. So are we going to go back up here in the range and go to the top? Or are we going to fall back down? We really want to know who's in control. And so I'll wait. And then I saw this big candlestick. Candlestick showing me that basically there's a big wick. So sellers are really in control at this point. Alright, sellers took control a little bit more. And a candlestick that follows is a very nice engulfing candle, bearish engulfing candle. Now this is the perfect indication I need to enter a trade at this point, because we went to the range, went back to consolidation, bearish engulfing, meaning as the sellers are taking control, and then we look to trade on that. So I entered the trade right below here, below the candlestick, the bearish engulfing candle, stop loss above the high. I always want to have some room for the stop loss because we have to adjust for the spread. And take profits are going to be at 2-1 in that case. And I'll show you, it's pretty funny because even with 2-1 here, I could have gotten more. But I want to show you that it doesn't really matter. So take profit, I think, was around that level here. We'll have to check. Now, price consolidated a little bit here and went down as we expected. We had this bearish engulfing candle, another bearish engulfing candle, and then price just went down pretty quickly. Now I got out of the trade pretty much here, okay, so a little bit below, and that was my 2-to-1 target that was hit pretty quickly. Now the funny thing with this is that just after we had this big move, okay, and this would make a lot of traders angry, right? I see people who are telling me they miss the move all the time, and when they see something like this big move after they're out of their position, right, then they're angry. Then they don't understand why that happened, and they want to take bigger take profit next time. But the point I want to make here is that as long as you did your plan correctly, as long as you got your 2-to-1, okay, I personally don't care. I don't even care what's going to happen after. And I may watch the chart just for fun or just to look for the next setup. But if something happened after my trade, I don't even care about it because I did my plan right. I executed correctly and I'm out with my profit, right? So people were seeing this big move afterward and saying that they missed the move or that they didn't do the trade optimally, right? Well, it's too bad. Like it doesn't even matter. You shouldn't even consider it because you did your trade correctly. And of course, if you exit like with the 1-to-1 reward to risk and you see this big move after, then you can be angry because you didn't do your plan correctly, right? If your plan says you have to have a high reward to risk, then 1-to-1, so let's say 2-to-1, and you did that, well, your trade is fine. And you got the money, you're out, and you shouldn't even be affected by what's happening after, okay? And it's pretty funny, again, because what happened after is the price just rallied back up. We had the news announcement, the crude oil inventory, and price went back up after, right, pretty strongly. So that's about it. But the main thing I want to highlight here is that you don't need to have indicators necessarily to identify your trades. Right? Just taking in consideration the structure and how price moves and who's in control. Is it the buyer or the sellers? I didn't talk about moving average here. I didn't even talk about RSI. And I didn't even talk about Bollinger Band because it's not needed at this point. And so many people want to have the confirmation. They want to have all these pieces aligning together, while you can just look at who's in control, or more like what happened in the past. What are the opportunities to trade? Are there opportunities? If no, just stay out. And then who's in control? Did the right party took control of the market? And it's exactly what we had here. So you look at candlestick patterns, you look at structure, and that's how you make a good plan. So I hope this video is valuable. If so, let me know. Please like the video. Let me know what you think. If you need any help, any advice, connect with me. Check out the Facebook group at thisarttotrade.com/group. And I'll see you pretty soon. Ciao.